Yes, good evening, everyone, and welcome to this session. It's just a question and answer session. So it's not, we don't have a formal presentation. So it's just to discuss what could happen this year in the markets, if anyone has any words of wisdom or potential opportunities they want to share with us. So basically, that's what we'll just be sharing ideas and sharing possibilities and what we should be looking at this year. So I hope it to be interactive, and if anyone has anything to share, by all means, to send your comments through the chat box, or you can raise your hand to share any tips or knowledge or words of wisdom for everybody. But what I'll start off with is just to say that of course, this year, from an investing point of view, or from your investment portfolio point of view, you need to obviously, we discuss asset allocation and reviewing your portfolio during the courses. The good old days of, apart from index funds, index funds, yes, you can just be invested in them and close your eyes and forget about them. But things like ETFs, stocks and shares, you want to keep an eye on them, and see what's happening. So for example, now, if you're one of the lucky ones that bought stocks at the early part of the COVID or ETFs or whatever, and you're making 100% profit or 150% profit, it might be a good idea to lock in some of your profit. I think we talked about that in the previous sessions before. Let me just bring up the whiteboard. So it's terms of reviewing your portfolio. So say, for example, you bought a stock at let's just say £4 per share, and it's now gone up to, let's say, £12 per share. So obviously that's more than 100% profit, because if it's gone up, obviously if it goes up from 4 to 8, if it's doubled from 4 to 8, that's 100% in itself. So if it's gone up to like £12, that's more than 100% profit. So if you're in that sort of a good scenario, it makes a good idea to just put a stop loss on your stock or your ETF, that if the price drops back to 8, they should automatically sell your ETF or stock. So at least you still make your 100% profit. But of course, if it continues to go up, then fine, you can continue to profit more from that ETF or stock. So that's one thing you need to always keep an eye on, in terms of review your portfolio. You don't want to have bought an ETF or bought a stock that is maybe 130, 140% profit, and you do nothing, and then something crazy happens this year and it drops back down and you lose all the profit you've made. That would be very sad. So that's one thing to do, is to make sure, if you have certain things in your portfolio that you made more than 100% profit, try and lock in some of your profit and put a stop loss there. You can always get the broker to help you. If you're having problems setting the stop loss, you can get the broker to help you. Again, that's what the brokerage firms are there for. They're there to help you out with stuff like that. So that's one thing. The other thing too is try to decide where to look for opportunities this year. Obviously, last year was obviously dominated by the COVID and the lockdown. And then as a result of the COVID and the lockdown, the tech sector did extremely well, because everybody was at home. Everybody was locked down at home. Everyone had to order online, order things. So things like Amazon were doing well. Netflix was doing well. Zoom, which we're using now, is doing well. So the tech sector did very well last year. And of course, some other sectors recovered too last year. But of course, there were some sectors that were heavily hit by the COVID, namely the airline sector, the retail sector. So obviously this year now is trying to figure out, obviously no one is God, only God knows the future. And again, that's why you do your due diligence and remember that there's some risk involved. That's so investing in the stock market is medium risk. So there is some risk involved. Um, but it's taking a calculated risk, following doing your homework and fundamental analysis and due diligence. But it's trying to think which industries might recover, which ones might recover soon, which one might take a long time to recover. So of course, things like the airline industry. The airline industry obviously, they took a huge hit. So, we all know the airline industry will recover. The question is it going to recover this year, 2021, or next year, 2022, or even 2023? The vaccine is being rolled out in most countries now. Quite a lot of people have now received the vaccine in UK, in the USA, and other countries. So the question now is the vaccine going to be effective? Is it going to control the spread of the COVID-19? Is it going to keep things at bay? Because obviously at the moment now, UK obviously is on lockdown. Most countries are on lockdown. The airline industry is still, there's still travel restrictions. But obviously, we all know logic tells us that this is not sustainable. This is not going to be, we're not all going to be locked down for the next 10 years. That's not going to happen. We're not going to be locked down for the next 10 years, and we're not going to be barred for traveling from the next 10 years. So that one is almost for certain that in 10 years' time, all this would have been resolved. I think what is uncertain is that, is it going to be resolved this year, next year, or in 3 years' time? So that's what we're not sure about. And then obviously, most importantly, which companies will survive, which companies will go bust. So that is where the tricky thing comes in as to what do you pick, which company, which sector do you think is at an all-time low? It looks like it's a very cheap bargain price now. Which ones are you willing to take a chance on? Which one do you think that, okay, I think, let me buy this ETF that tracks the airline industry, knowing that it might be flat for the next year or two, and I'll take that risk knowing it's going to recover. Or knowing that, okay, American Airlines, I know they're going to get support from the American government, or for example, Air Canada, Air Canada, this sort of companies that are sort of supported by their governments that will protect them against bankruptcy and then, give them some cash injection. So those are the sort of things, this year is going to be about trying to figure out, which sectors, which companies that are at an all-time low, either the sector or the companies that are at an all-time low, which ones are good ones to pick up now in the hope that, it will recover shortly. But again, like I said, that's the big question now. Which ones are going to recover soon? Which ones are going to take a long time to recover? And which ones are going to go bankrupt? So, on that note, the question now is, any suggestions, any thoughts, any comments, or any questions from anyone? So like I said, this is not a formal session. It's meant to be more a discussion. Or again, if you have any questions, if you have any specific questions regarding investing, the market, certain sectors, certain companies, speak now, or like they say, forever hold your peace. So any questions, comments, or words of wisdom? If you have, let's say, you can either send that through the chat box or you can raise your hands. So this will either be Actually, while we're waiting for questions and comments, I just want to have a look. I'm just curious actually now that I mentioned American Airlines. I'm just curious to see where it is now actually in terms of their price. American Airlines. Well, the interesting thing is that most of the stock markets are doing very well on the whole. You know, the US stock market is just creating new highs. The UK stock market too has recovered nicely. So yes, at least the stock market as a whole is booming. But obviously, like say in certain individual sectors or certain companies are still struggling. So let's see, American Airlines. Okay, so this is a good. I wouldn't say it's a good one. Like I said, I'm not recommending any particular sector or any company. You have to make that decision yourself. But this is just an example, not a recommendation. So this is American Airlines. You can see it's still flat. The current price you can see is $16 per share. It's been as high as $30. So you could still potentially make 100% profit on this if it goes back to where it was before. In fact, let's have a look at how it's over the last 5 years. So if you see over the last 5 years, it's actually gone as high as almost $60. So, you know, there is a potential that there could be a huge potential of making a lot of money buying American Airlines stocks. I'm not saying you should do that, but I'm just saying to just give you an example of what to watch out for this year. Because like I said, certain sectors, certain companies at an all-time low because of the effect of COVID. But once the COVID hysteria dies down, especially now with the vaccine in play, you expect these companies and these industries to rebound back. And if they do, I'm not saying they will, because obviously American airline could go bankrupt and it could cease to exist and you could lose all your money. But if they get back to the way they were, you know, you could potentially make a lot of money on them. So that's just an example. Bola, the Bitcoin sector seems to be flying. Are we looking at potential boom and bust or Bitcoin's linked to blockchain? Is that the way to go? That's a very good question. I think with Bitcoin, as with most things, people get carried away with the latest thing or with what is happening. Obviously, the people who made a lot of money with Bitcoins are those who bought it very early. So now, you know, you're at the tail end of it. So whether it's, again, it's funny enough, it's the same thing I've just said with this airline sector. Nobody knows the future with Bitcoin. And I think that's what people always underestimate is risk. So no one is saying, for example, with American Airlines, you could buy American Airlines today, and then the American airline recovers, the airline industry recovers, and you can make, you know, if you can go from $15 to $60, that's, you know, almost 200% return on your money. That's a huge profit. But it could go bust. Same with Bitcoin. You could buy Bitcoin today and it jumps up in price and you make a killing, or it could collapse and you lose your money. So that is the thing about, you know, the financial market is most people tend to ignore risk. And with Bitcoin, it's not like a guarantee. So yeah, Bitcoin it's good. It's here to stay by the looks of things, but whether you're going to be making 100% return a day, like some people do, well, you take your risk. So as with everything you buy, you know, the same principles still apply with Bitcoins or cryptocurrencies. You do your analysis, you do your homework, you buy it, but you buy it knowing that there is no guarantee. But people always look at Bitcoin as if it's a guarantee to make money. No, it's not a guarantee. I mean, that's how most people got themselves burnt in the stock market during the boom years. Because people, I guess, just human nature. You know, when the stock market is booming and people are making money in the stock market, then everybody wants to jump in, but they tend to jump in at the tail end. Then the market corrects itself, they lose money, then they start to cry. It's a bit like the COVID crisis. You know, the COVID crisis, you know, when the market crashed, you know, people like me were buying a lot of stocks at very cheap price. And of course, within a couple of months, making 100, 200% profit. But, you know, those who came late in the game, if they just jumped in blindly, you know, they will not be making the money the same as the person who made it at the early stage. Same with this American Airlines. You know, if someone, I'm not saying again, please, I'm not recommending you buy American Airlines. I have to keep repeating that. And I'm glad this is being recorded. I am not recommending you buy American Airlines. I'm using it as an example. So today somebody might decide, okay, I'm going to take a risk on American Airlines. They buy it and then it shoots up. It's now trading at, you know, $50, $60 per share. Now the person who bought it here is making a 200% profit. And then maybe somebody hears that, oh my God, everybody's making money on American Airlines. American Airlines shares are booming. Then you jump in at the tail end. So even if the market corrects from 200% profit to 150, the person who bought at this point is not bothered. They can still hang on to it. But the person who jumped in at the high point, if it corrects at 50%, they've lost 50%. And then they will be in tears. So it's the same with Bitcoin, really. And even with gold. Gold too is a big thing. And gold has been around for forever. Since the biblical times, gold has always been a huge commodity. But again, the prices go up and down. So I think that's, you know, I always tell people, so long as you're aware of risk, you understand there's a possibility of losing money, it really doesn't matter what you buy. It doesn't matter whether you buy Bitcoin, you buy commodities, you buy gold, you buy shares, you buy ETFs. It really doesn't matter. So long as you understand risk, you understand there's a possibility of losing money, and you accept that, then everything is fine. And that's the attitude I have. So regardless of what I invest in or I buy, I'm not buying them thinking I'm guaranteed to make money. No. I buy them fully aware that I could lose money, and I'm prepared for that. And it's because of that, then I'm confident to take decisions. Well, of course, you do your homework first. And again, the reason why I don't invest in Bitcoin is because I don't know much about that sector. I haven't bothered to study that sector. And I haven't got much interest in that sector. In terms of the cryptocurrencies, the underlying blockchain technology, which is the distributed ledger technology, DLT, that one I'm more interested in, the distributed ledger technology. I'm interested in the underlying tech because that one, there's a lot you can do with it. So I am involved in some businesses where we're trying to apply that in terms of how we market our products, how we transfer our products. So the underlying technology is something I'm looking into, getting involved in. And in fact, I've been looking for ETFs that could track just that part of that sector, which is the underlying technology, the distributed ledger technology. But cryptocurrencies, specifically Ethereum, Bitcoin, Litecoin, no, I'm not interested in all those ones because I know they're just as risky as trading currencies or trading the Forex market or trading the commodities market. They go up and down. There's a risk involved. So I just stick to currency trading. But yes, whether there's potential boom or bust, only time will tell. But the key is, yes, be aware of the risk, do your homework, get to know the market well, and then you take your chances, so to speak. So G, what are your thoughts about the forecast given on the potential crash of the markets due to the inflated bubble created? Will you explain how this bubble is created and what its cost of it? So G, there's always, it's funny because when it comes to the stock market, you always get people who forecast doom and gloom. I never believe those guys. I just look at what the market is doing and make my decisions. But you always get commentators who are always prophesying that the end is near, the end is coming, the market is going to crash. So you always get that, and there's a lot of so-called noise when it comes to the markets. Everybody has a comment. Everybody is commenting. So some people will say the market is going to be booming forever. Some people say it's going to collapse. We're going to have a Armageddon, and you get that every day. So, like I said earlier, I just do my homework. I try and keep it simple. I try and block out most of the noise because we all know about fundamental analysis. So I look at the sector. I see if there's I go back to the basics. Is there a demand for that sector? So if there's an ongoing demand, and I think that demand is going to be there for a long term, then that's a good sector to be in. And then if I can find a company in that sector that is doing very well, and I'm getting it at a cheap price, then I go for it. Again, knowing that there's a risk involved. Like I said earlier, if I buy it and it shoots up and I'm making 150% profit on that stock, I just I put a stop loss to lock in some of my profit, or at least 100% of my profit. So if the market does crash, that doesn't bother me. Even if the market crashes, I'll still make my 100% profit because I've put a safety net in there to keep my profit that I've made. So I think once you have a bit of a structure on how you approach the market and how you watch out for things and how you behave, you don't worry about this doom and gloom people that talk about that. I'm just actually looking for a link to share with you because I tend to keep some of these guys who make all these predictions, and it tends to be wrong. Okay, let me show you. I'm going to show you two. I tend to keep this because it's always the same with these guys. They will say, look at what is going to happen, or the market is going to crash, and then, of course, if it crashes, they'll say, I told you. So you can see this is one here. This is from last year, May. This is in May last year. So you can imagine this is May 2020. So this guy said, my stock market forecast for June is likely wrong. He forecasted the market will crash in June last year. So he said, my stock market is wrong, but he said, but watch out for August. So he now said the market will crash in August. But as we know, it did not crash in August. And as we know, it's not an all-time high. So again, this guy is just, I just take everything they say with a pinch of salt. I do my own homework. Let me show you another one. So it just goes to show that all this sort of commentators, they're just looking for headlines. That's it, really. They're just looking for make news. They say all sorts of crazy things. So you can see this is another chap. At least he's been honest enough to say it. Again, it's from June last year. It says his 3% return as the Dow and S&P soared more than 40% from the March lows has humbled him. So again, he's the one that was predicting, the market is going to cry, blah, 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 blah. But, it didn't happen. So I think the bottom line, it's why I keep telling people, only God knows the future. All these guys that keep acting as if they can predict the future and they know the future, it's all BS. Nobody knows the future. But yeah, some people just arrogant enough to come on and say in public, XYZ is going to happen. the market is definitely going to go up for the next 10 years, or the market is going to crash for the next 10 years. You don't know. Only God knows. So that's why I always just keep it simple. Like I said earlier, I know if I buy a stock today, there is no guarantee. I already know that. I don't care what this guy say, this so-called analysts or experts. They're not God. They're just giving their own opinion, and their own opinion is not the definitive opinion. So I know that if I buy a stock today, there is a chance the price will fall. Actually, let me bring up the whiteboard again. I just keep it simple. So if I buy, let me just use American Airlines again, since I've got that up already. Again, I'm not telling you to buy American Airlines, please. So if I buy American Airlines today at $10 per share, you just assume I buy it at $10 per share. Because this is how I keep my own simple. I do my analysis first. I do my fundamental analysis. I'll assess the airline sector, American Airlines, profitability, blah, blah, blah. Once I've done that and I'm happy and I want to buy it, I'll buy it knowing there is no guarantee. So I do my own homework first. Then I buy it at that price. I don't care what the other guys are saying. Now, once I bought it at $10, I'm aware there's a risk involved, and I know I'm prepared to lose money. And if you all remember, during the courses, I said that I'm happy to lose up to 50% of my investment. And so long as I don't lose 50%, I'm happy to keep on holding on to that stock. Once I lose 50%, I sell it and realize my 50% loss. So once I bought American Airlines at $10 per share, so long as it doesn't drop to $5 per share, I'll hold on to it. So it's as simple as that. Regardless of what the commentators, the news, the world are saying, I don't care. I bought it at $10. If it drops to $5, i.e. I've lost 50%, I sell it. Period. It's as straightforward as that. If I bought at $10 and it does not drop to 5, if it drops to 9, 8, 7, 6, 7, whatever, and it doesn't drop to 5, I hold on to it. But once it drops to 5, I sell it. So it's as simple as that. So if it doesn't drop to 5 and it starts going up, it goes up to $11, goes up to 12, goes up to 13. So by the time it now gets to $20 per share, I have now made 100% profit. So once I get to 100% profit, I am now thinking to myself, okay, do I just take my 100% profit and run? Or do I let that 100% profit continue to run? So at that point, if the market is still booming, if things are still looking right, there's no crazy thing going on, I leave it alone. Now, if it goes up to, let's say, $25 per share, like I said earlier, I would then put a stop loss at $20, saying that, if the market ever drops and gets to $20, the platform should automatically sell my share and I'll realize my 100% profit. But if it doesn't drop, then I'll just continue riding the profit. Of course, if it gets to $30, I move my stop to $25. If it gets to $35, I move my stop to $30. So you can see, because I have a clear plan of how I invest and how I monitor my investments, I don't really care what all these guys say about the market is going to crash. Because like I said, if the market crashes here, so what? I'd still make my 100% profit. And again, if I bought it at 10 here and it drops and I lose money, fine. I was aware of that before I bought it. I didn't buy it thinking there's a guarantee. So yeah, I think that's the best way I could answer that question. So G, is that you have to be wary about all these guys that talk on the news. It's their own opinion. And I just showed you these two examples of people who that their so-called expert opinion turned out to be wrong. So, which is not surprising, because Like I said, nobody's God. I am not God. I can't tell you where the market will be. That's why I don't give people specific advice in terms of, apart, the only specific advice I give people is to buy index funds. Outside index funds, I don't give people specific advice, because that's why I always say you make your own choices, you analyze it, and if you lose money, because I think most people are looking for who to blame. They're looking for someone to blame when they lose money. Oh, Remy said I should buy American Airlines. I've lost money. It was Remy's fault. No, no, no. You make your own choices. You make your own choices. But yeah, those naysayers, I don't really buy what they say. You know, I mean, that's the whole aim of having the knowledge yourself, because you have the knowledge yourself on how you can do your fundamental analysis. You know how to assess the market yourself. So, yeah, it's interesting to read their comments and read what they say, but don't take it as the gospel truth. No. I mean, I always tell people your analysis might actually be better than these guys. Don't be fooled. Don't think they know everything. Nobody knows everything. Nobody's God, like I keep saying, and I keep repeating that nobody's God. You're just as smart as they are. So you just do your own analysis, do your own due diligence, do your own fundamental analysis, and make your own choice. And then once you've made your choice, always remember that there's no guarantee. Don't think because you've analyzed the market is going to behave the way you expect it to behave. Nobody controls the market. So you do your due diligence, do your fundamental analysis, make your choice. Know that there's some risk involved. You might lose money, and then you go for it. And then, like I said, if you start to profit from what you've done, try and make sure you protect your profit. So once you do all that, you'll be okay. But yeah, all these guys, I'm not. I don't buy what they're selling. Any other questions, comments? Elizabeth, hi Doc. Would it be advisable then for one to place a 50% stop loss at the point of buying the share ETF? Yes, you could do that. Yes, Elizabeth, you could do that, and I would advise to do that. I think, how would I put it? Because, okay, let me just talk about myself. Obviously, because I trade the market on a daily basis, number one. So because I trade the market on a daily basis as a trader, I'm sort of automatically, I'm closely following the market on a daily basis. So I know what is happening on a daily basis. And then obviously, because I run regular courses, I mean, for example, now we've started the next investing course. The current investing course started on Wednesday. Actually, it started yesterday, interestingly. So the current investing course started yesterday. So obviously, during every course, I share my investment portfolio with the delegates. So that also gives me a chance to review my portfolio. So the combination of trading the markets every day, doing regular seminars, and showing people my investment account, I have that advantage that I am sort of closely monitoring my portfolio, and I have a good idea of what's going on almost on a regular basis. But if I did run investment courses and I did not trade on a regular basis, yes, that's what I would definitely do. I would definitely place a 50% stop loss and a 100% profit limit when I place my investment, so that I don't have to worry and watch it all the time. So yes, I would suggest you do that. That once you buy your share, that's what I would like. So please, yeah, definitely do that, Elizabeth. And like I say, you can get the broker to help you with that. So again, let me go back to American Airlines. Again, I'm not recommending you buy American Airlines. So let's say I bought it at $10. So yeah, I'll suggest you just straight away set a stop loss of $5 and also set a profit limit of $20 in case you're not around. So that way, once you bought this American Airlines, you know you're either going to make 100% profit or lose 50% of your investment. So you can do that straight away from the beginning. Then maybe after a couple of months, you review your portfolio, you find that it's gone up to maybe $17. So it hasn't gotten to your 100% profit yet, but it's gone up to $17. So at that point, you could then decide, okay, should I just leave my profit limit at 20 or should I increase it? Again, so basically what I'm trying to say, there's no hard and fast rule. You can play around with it and move things around. But yeah, certainly at the point of buying it, you could, and I will suggest strongly, you just place the 50% stop loss. Because that way, if the so-called doom and gloom people, if their prediction becomes correct, not because they predicted it, but that's just the market. The market, I mean, you know, let's put it this way. The market can only go three ways, as we all know. The market can either go up, it can either go down, or it can go sideways, as in it can just be flat. So if some people predict the market is going up, there's a chance they'll be correct because yes, the market is going to go up because not because of them, because there's a chance it's going to go up. So if it's going to go down, you know, if some people predict that, then they'll seem as if they're geniuses, but that's just what the market was going to do, you know. And the market is flat, and some people predicted that. It's not because they are geniuses, but that's just what happened in the market. So, like I said, the market can either go up flat or go down. So at this point, if you get, let's say, 50 people, and 50 people. So if 50 people say it's going to go up, 50 people say it's going to stay flat, and 50 people say it's going to fall at this exact point, then when it goes up, the 50 within this group will feel that they're smart. But if it did not go up and it went flat, the 50 people who said it was going to go flat will feel they're smart. Now, if it's not flat or it didn't go up and it went down, well, these 50 will think they're the ones that are smart because it fell. And that's just the way of the world. You know, it's not because of them that the market fell or because they were fun, smart people. It's just by chance. You know, yeah, you're lucky that your prediction was right, but it wasn't because of you. It was just a lucky guess. So yes, Elizabeth, just in case the market just collapses, you know, because nobody knows tomorrow, like I said earlier, and I'll keep saying, it's only God knows tomorrow. Something crazy can happen tomorrow. All of a sudden, that we could be in World War III. Donald Trump can just burn down America. You know, Iran can just attack America. All sorts can happen, and all of a sudden the market just crashes. But at least you've got that protective thing in place with the stop loss. You know, something crazy happens while you're on holiday or while you're away or while you're just not watching your portfolio. You've got that safety net to at least only lose 50% of your investment. So yeah, I would suggest you do that. But yeah, don't get scared about all these people, so to speak. Any other questions, comments? Like I said, this is not a formal session, so we'll be here for as long as you have questions and comments. If we run out of questions and comments, then we will all call it an evening and enjoy our night. Any more questions, comments, or anyone has any tips for us as to where we can make money? Guaranteed. Can someone give us a guaranteed place we can invest and make money? We want a guarantee, which doesn't exist. Actually, let me look at Air France. Air France. So we know American Airlines is flat. €5. Air France. I actually use Air France a lot. So who knows? Maybe I should look at actually investing in Air France. The other way you can look at all these things too, especially when you're aware of the risk, is let's look at this. Okay, so you see Air France too. Let's look at 5 years. Okay, so let's see, 14. Damn, so you can see it can go from 5 to 14. That's triple the price. Now, another thing you could do as an investor, I'm not saying you should do this. Of course, you know, as a trader, I have a high risk appetite. So for example, I could just say to myself, okay, I have 200 pounds. I don't mind if I lose this 200 pounds. Let me just buy Air France. Let me just buy Air France, buy it for 200 pounds. And if I lose it, fine. So basically, I can just write off the 200 pounds and buy American Airlines and buy KLM, buy those two companies, you know, put 200 pounds or 300 pounds there and write it off. So if I lose it, I don't care, because, you know, I have that mentality before I bought it that, look, you know, I know this is a industry that is on its knees, it's crippled. Let me just throw in 300 pounds there and see what happens. And if I lose it, fine. At least I went, again, that's the whole aim of being aware of risk. And then you decide how you want to play the risk. And then, of course, if it goes up, then you make money. If it doesn't, at least I knew the risk I was taking. Again, I'm not saying you should do that, oh, please. Lara, what are the pros and cons of buying a merger company stock like Churchill IG is doing well? What's Churchill and IG? I know IG is where British Airways is. I thought Churchill was an insurance company.
Not that Churchill, it's on HL.
Sorry?
It's on HL.
What does Churchill do?
They merger company. They raise funds. There you go.
Which one?
First, the second one. Oh, no, it's Churchill merger. Let me just give it to you. Sorry, it's not that one. Is it that one? So I'm not wearing my glasses, I can't see.
It's okay. Because what I'm trying to figure out is that, you know, is Churchill an investment company in itself? Like, you know, JP Morgan and the kind of thing, or Merrill Lynch? Are they just an investment?
Yeah, Churchill Capital Corp. Yeah, that's the one.
It's a blank check company. What is that? It's a blank. The company is formed for the purpose of effecting a merger, share exchange, asset acquisition, share purchase. The company is not engaged in any business of and has generated no revenues. I don't know. It sounds like a shell company.
So I'm looking into that. I wasn't sure.
Okay, so yeah, it's not something.
They're currently trying to raise funds for some EV companies.
Actually, this is actually a good example of, you know, knowing what a company does before you invest in them. Because like they've just said here about what they do, they don't really do anything. They're just a middleman.
Yeah.
So you have to ask yourself, do you want to invest in a middleman? They're just there to make deals. And if there are no deals to be made, then what do? Well, there's somebody else to make that deal. Because mergers and acquisitions are done a lot by, I mean, that's what JP Morgan, Merrill Lynch, all these investment banks, that's what they do. So why would I invest in Churchill Capital as a company? I might invest in the company they want to acquire, but not in this.
Yeah, but the company they want to acquire that I'm looking into, it's not on the market yet.
What do you want to acquire?
Lucid Motors. It's an
Okay.
electronic vehicle.
You know about them?
Yes, I've been looking into them.
Okay, I mean, that's, so if you know about them, that's different. Because once you know about them, and you have a good idea about that company, then yeah, you can take your chances with them. Information is key. That's the real thing.
Yeah, so that's what I'm looking into. Yeah.
In order to beat Tesla, they want to beat Tesla.
I remember when we were looking at Tesla, when we were doing the course, it was like $400 per stock,
Yeah.
and now it's come up to 885.
Yeah, they've just been doing very well.
Yeah.
Actually, that's a good example because, like I said, you can't invest in hindsight.
Yeah.
And that's why it's important to be aware of risk. So if I just, like I was just saying about American Airlines, we don't know if it's going to go bankrupt or we don't know if it's going to go up 200%. So whoever invests in American Airlines now, you know, they'll be taking a risk and they have to be aware of that. And then if they're lucky and the things turn out well, they make money. But if not, they lose. But that's a decision you have to make at the time without knowing what's going to happen.
Yeah, that's sorry. The other bit I said I wasn't wearing my glasses. It's IAG. So it's an airline.
No, that's British Airways. That's the one that acquired British Airways, IAG.
Yeah.
And the Iberia.
Yeah, and they're doing very, very well. Because I remember we had a discussion about that as well. And yeah, that's the one.
So yeah, I know IAG. Oh, they're still flat. So actually, just 160p. So this was even £1 per share, £1.60 per share. So again, I'm not telling anyone to buy this, but these are sort of things like I was saying at the beginning of this talk about the airline industry. Most of these airlines, their shares are at an all-time low. So this is something that, you know, so this is 3 now that I've shown you: American Airlines, Air France, and IAG. You can see all their shares are so low now.
Yeah. We bought it at 148 or so.
You bought it?
Yes.
Oh, well done. You took the plunge. Yeah, I'm actually thinking about, it's something I've been thinking about this beginning of the year, about the airline industry, because I know it's going to recover. I just don't know how long, like I said earlier. And I'm just thinking, do I just say, okay, put £1,000 there, you know, split it up among some of these companies, maybe 300 in IAG, 300 in Air France, 300 in American Airlines, and write it off and see what happens.
You can afford to do that.
No, okay. I'm talking about the principles. I should have used pound value, but the principle. But so yeah, but going back to your Lucid Motors, I think that is the same principle too. So yes, Lucid Motors could be the next Tesla, or they could just go bust.
Yes, and so I'm looking at electronic vehicles now, and there's NIO, and NIO is going up every day.
You remember Quibi? Oh, you didn't? You never heard of Quibi? No. Okay, Quibi is they were a streaming service. they launched during the COVID. They were meant to rival Netflix and Apple TV and all that. And they got some very good guys on board. I think one of the ex-executive from Disney was on board. They had LeBron James and some of this Hollywood star did some. So Quibi just means quick bites. So I think it's just like 10 minutes programs and 10 minutes clips of programs. And they got billions of dollars invested in it. It was meant to be the next best thing, Quibi. Let me see if I can Google it. And, you know, they were trying to get into that Netflix and streaming service space. So there's a lot of buzz when they came about, Quibi, to download Quibi. I think they got a lot of downloads when they first started, but now they're out of business. They've gone bust. So, that's the thing about, that's why I say all this thing, one just has to be aware of the potential risk. There's no guarantee, but it's the potential risk. So Quibi is just a good example of that. There was a huge buzz about Quibi when it came about, when they first launched it. Everybody was talking about Quibi, and then before you know it, shut down, lost billions of dollars, and they were out of business. And then on the flip side, I think Disney launched something, I can't remember what streaming service they launched, and that's doing very well. So yes, again, all these things from a principal point of view, you never know what's going to do well, you never know what's going to do badly, So whatever thing it is, the principles are still the same. You just be aware there's a risk involved. Once you're aware of the risk involved, then that in a way determines how much money you decide to put in there. So again, going back to that airline, if I'm going to invest in the airline sector now, I'm going to be investing with money I can afford to lose, because it's a very dicey sector. Whereas there's some sectors that if I want to invest in them, I might put more money because I have some more comfort that this sector is solid and doing well. So this is where your fundamental analysis comes in, your risk analysis comes in, because once you're aware of the risk, you're aware of what you're doing, especially with new companies. For all companies in general, I'm not talking about Lucid Motors now, but all companies in general, I mean, the standard rule is that most new companies go bust within 3 years. That's just a standard rule, regardless of what new company has been formed. Most new companies don't survive up to 3 years. So that's why there's a huge risk investing in new companies. You don't know which ones are going to last and do well, and which ones are just going to fold up, so Quibi is a good example. It shuts down months after launch. That's very sad. Just a couple of months after the launch, they were out of business. So yeah, I think that's the only thing I would just advise is that once you do your fundamental analysis, try and assess the risk of what you're doing. And then once you know about the risk, that will then inform you as to how much you put in there, and also your mentality. Because like I said, again, using the airline, if I buy American Airlines now, or Air France or IAG, I will buy it with money I can afford to lose. And then once I have that mentality, it takes away any stress or worry, because I already know that, okay, I'm getting to a risky place. And of course, that's why I personally don't move away from new companies. I think I've said this before, especially in the courses. I tend not to invest in new companies because they're so uncertain. There's no proven track record, and I don't want them to use my money to prove whether they can work or not. Once they've proven they can work, then I can give them my money. But they don't use my money to prove if they can work. You talked about ETFs with exposures to airlines. Do you know any? Let's see. I don't know any. I was actually thinking about buying them individually. And I might just join Lara in buying IAG. So if I lose money, it would be Lara's fault, because it's Lara that said I should buy IAG. So it's her fault that if I lose money on IAG. I hold you responsible, Lara.
If you gain money, you have to buy my ticket.
Sawa, that's a deal.
Yes, good. And we've got loads of witnesses. So no wonder here I come.
Amen. So let's see, airline ETFs. Let's see. So yes, Abimbola, I wasn't actually looking at airline ETFs, but let's Google and see if we can find it while we're here. Jets. What is Jets? Let's see. And Fidelity, that's good. The best and only airline ETF. Interesting. Jets. Okay. JETS. Let's see if they have it here. JETS. JETS. Nope, they don't have jets, unfortunately. So you might have to either contact Hargreaves Lansdown and find out if they can get you. Let me go back. Let's look for jets itself. There you go. Okay. At least you know it's under Fidelity Fund Group. And they do have Fidelity funds on the Hargreaves Lansdown. So it would be interesting to ask them if they can get you this JETS ETF. Well, let's see. I'm trying to find out what's within this, what they track here. There we are, portfolio composition. So you can see they have Southwest Airlines, Delta, American Airlines, United Airlines, Alaska, JetBlue, Air Canada. Okay, they don't have any UK or European airlines. They're mostly American Airlines. So that's this. I don't like this ETF. It just has American Airlines alone. It would be nice if they had, like, Air France or IAG or Qatar Airlines or something else apart from just mostly American Airlines. Anyway, but that's jets. Let's see if there's any other airline ETFs apart from this one. Let's just go airline ETFs. This is iShares Transportation Average ETF. Let's try. Okay, so this one has given you some more ETFs. So you've got the jets there, but you also got this IYT. But this one also has railroad stocks. Obviously, it's transportation. So it's got railroad, air freight, and 70% in airlines. Okay, that's okay. I think you might have to just do some homework and some searching to look for airline ETFs. Or contact Hargreaves Lansdown and see if they have any specific airline ETFs. Let's see, top airline. This will be the last one. I will check. So actually, let me just put this in the chat box. So that's the link. It's in the chat box. Airline ETF lists. Oh, don't tell me just jets they have there. Oh gosh, it's just jets. So it seems as if jets is the main airline ETF, but also seems to be just skewed towards American Airlines. So there you go, Abimola. Barbara, I've had some success with blockchains in the UK, Canada, US. No guarantees, yes. Do you do your due diligence? Yeah, quite right, Barbara. Clean energy stocks are picking up as well, but do your due diligence. Barbara, you sound like me now. Do your due diligence.
I don't want any blame.
Yes, so always put that disclaimer. But yes, those two, I agree with you, Barbara. And like I said at the beginning, the blockchain technology part of things are doing well, and that's something I'm interested into. The technology side of blockchain, the distributed ledger technology, not the. So yeah, I ignore Ethereum, Bitcoin, cryptocurrencies, and trading cryptocurrencies. But the blockchain technology itself, that's a good place to look at. So yes, I agree with you, Barbara. But yes, I also agree with Barbara. Do your own due diligence, And obviously, we're all going towards clean energy, especially now that Donald Trump is out of the way, because obviously he was against renewable energy and clean energy. So now that things are sort of back to normal, they might go back to the Paris Agreement, and renewable and clean energy might be back on the agenda. So again, and of course the new generation, the millennials, are heavy into clean energy and saving the environment. So from a long-term perspective, and if you're looking into the future and looking for things that will have a long-term growth, then clean energy will be the place to be. So totally agree with Barbara on that. But yes, you do your own homework, do your own due diligence on that. Abimbola, you're going to buy more IAG. That's another one for Lara. You have more commission for yourself from Abimbola.
Sorry, that message was actually meant for a private.
It's too late.
Now we all know.
Now we all know.
Now owes me a plane ticket as well.
I had bought some IAG shares, and they were going down, and I was trying to convince someone to stick with them, and we were waiting for it to go further down to 150 to then buy some more.
Okay.
But it started to rise. But it was a private joke.
Yeah, don't worry. I'm going to join you and Lara with IAG. Especially now that I've seen the price at £1.60. That's very low. I think
but because it's now a Spanish company and we're no more in the EU, you do have to pay a charge.
Oh, how much?
I think it's 0.0002%, something like that.
That's okay. That's okay.
What's that to a millionaire?
Amen. Amen.
Like,
no, but that's extreme level of Ijebu. If you're complaining about 0.00000 something percent, Abba. Even Ijebu man like me. Yeah, but the upside is great because I'm just looking at this £1.60. It's quite enticing. I'll start looking because, like I said, this is something that you can just put £100 in there and buy 100 shares and see what happens. So yeah, I probably would join Abimbola and Lara on this one, but with a small amount of money that I can afford to lose, and then blame Lara. Any ideas on real estate, guys? Real estate is always a good thing. I don't know if you watched. You attended the seminar we did on real estate in USA, and also the seminar we did on real estate in UK. So we had a seminar on real estate in the UK, and we had a seminar on real estate in USA. The USA one is on the platform, if you didn't miss it. So if you go to the featured section of the platform, you can watch the recording there, or with Jack, of real estate investment opportunities in the USA. Unfortunately, we don't have the recording for the one we did on real estate investment in the UK. Maybe we'll see if we can arrange another one sometime again this year. So yes, real estate, it's always a good investment, but yes, you need to be careful where you choose to invest in real estate. So you also need to do, just like stocks and shares, you need to do due diligence as to where you invest. Like we discussed, for example, in the one in USA, there's a high demand for elderly real estate for the elderly population. There's a high demand for that. So that's a huge growth sector in the USA to look at. Single family homes are not doing as well. So again, you need to study the market and know where the demand is and where there's less demand, and know where you're going. Abimbola, okay, I think we discussed that. You now have to pay a percentage on due to being a Spanish company. HL doesn't like ETFs without a KID report, so I doubt if they'll have the JETS one. Okay, yeah, you might be right, but there's no harm asking them. You might be surprised, but you might be correct there. So with all this Brexit now, it's going to be costing extra fees on buying shares in Europe. I didn't even think of that. Oh no.
Yeah. So if you voted exit now, we just have to bear the brunt of that.
Oh gosh, see what Boris Johnson has done to me. Okay, we just have to grin and bear it.
Absolutely.
We can't, no use crying over spilled milk. It's happened. So just have to live with this.
Find the best stocks in the situation that we're in.
Yeah, exactly. Yeah. BCHS blockchain ETF is doing very well. Yeah, let's see if we can see BCHS. Yeah, like I said, I like the blockchain technology. Oh man, it's doing very well. Yeah, so that's really the place to be. It's in the technology itself, and I think that's actually less risky than Bitcoin and Ethereum, like I said earlier. So thanks for bringing that up, Bola, because it's just, I think I can't remember which ETF I bought. Let me see. Let's see. Let's go back to that December theme. Okay. So that's the one I bought. Oh, that's what I bought, actually. I forgot I bought that one. So I remember, okay, so I bought that one too. Because I remember when we did this theme on December, I posted this about ETFs tracking the blockchain technology. Again, obviously, you can all refer back to that on the platform. But yes, yeah, okay. So, like I said, that's the place to be, and that's where to look at is the blockchain technology itself. Because the blockchain technology is used in so many different things now, in so many different ways, and it's here to stay, and is not as crazy in terms of jumping up and down like Bitcoin and Ethereum and all that, like cryptocurrencies. So yeah, blockchain technology is something to watch, and that's another thing that's for the future. Out of interest, can we look at Emirates and Kuwait Airlines? It depends on if they are listed on the stock exchange. I doubt if they are, but let's see. Because those are government airlines. So I doubt if they're listed on the stock exchange. Yeah, I don't think they are listed on the stock exchange. Because these airlines, Qatar, Emirates, Kuwaiti, they're more or less government owned. Where the government owns, almost 100% shareholder of the company. So they're not really available for people to, let's see, Emirates shares. So I think these are sort of stocks that might not be easy to find, to buy. Emirates Airline share price, United Arab Emirates. It's not giving us much information. Where to buy good old Google. Oh no, not why to buy, where to buy. Oh no, this is how to buy Emirates stock, let's see. So there you go. You can always find everything you want on Google. How to buy Emirates stock. So step 1, open an account with an international broker. So buying stock in the Emirates seems a world away, but as you will find out, it's not too big a challenge and distance is not a hindrance. In fact, it's fairly simple to own your own piece of the Emirates as laid out in the following manner. Oh my gosh, this is a long story. Let me put this in the chat box for you. You can read that, Bola. There you go. UAE, Kuwait. Sure, it's probably the same with Kuwait. Let's put where to buy Kuwait. Kuwait's National Airways list on Kuwait Stock Exchange. So I guess you have to go to the Kuwait Stock Exchange to buy it. So like I said, all this airlines that are owned by governments, especially foreign governments, it won't be easy to get their stocks from outside their country. Oh, sorry, Bola, you dropped off, but no worries. I put the, you can catch up on the recording. Basically, I'll just say, Bola, when you dropped off, that Kuwaiti Airlines and Emirates Airlines are government-owned airlines. So it will be easy to get those shares from outside the country of where they exist, unless you can access that country's stock exchange. Until one day they list on the European Stock Exchange or the London Stock Exchange or the New York Stock Exchange, and then you might be able to get them. Any more questions, comments, recommendations, advice? Pleasure, Bola. Any more questions? Okay, so I think we've all got some good advice from Barbara, Lara, Abimbola. So they've given you some suggestions where to put your money. So we're all good this year. We all know where we're going to make our money this year, courtesy of Barbara, Lara, and Abimbola. So thank you, everyone. I wish you all a wonderful year. Have a good year. Please do keep safe, and we'll catch up on the platform.
Thank you for your time.